Hi there, welcome to Kneppy Invest. Time to do update 21 to the performance of Kneppy's portfolio. So it's been 2 weeks since I did the most recent update. Not much happened in the first week of that fortnightly period. And then in the past week, quite a few acquisitions and disposals to the makeup of the portfolio, which is understandable because this time of year, we do see a lot of Appendix 4Cs, a lot of financial reports being released by small cap companies. And we've also seen a lot of trading updates and a lot of updated guidance and actually new guidance from companies in regards to the financial year numbers and their expectations, which is understandable because managers of companies should be getting a better idea of how the company they're managing is performing, and they're showing that knowledge or giving that knowledge to the market. So a lot of potential buys and sells out there, and that's one of the main reasons I have made some acquisitions and some disposals during the past fortnight. Now, before I get to the video, I just want to talk about the setup of this Kneppy's portfolio for those who haven't seen one of these updates before. Now, there are two main reasons I decided to set up this portfolio in August 2020. The first reason was my investing strategies have evolved over time. So when I first started investing, I was much the buy and hold sort of investor that you'll find a lot of professionals trying to ask their followers to embrace. Just to find a company you like, that you think has a good future, buy that company and hold it as long as possible. Now, that's the sort of strategy I started with, and it's evolved to a more of a momentum sentiment strategy or philosophy, and that sort of strategy really suits my personality. And I really believe it's a very good idea to find a strategy that suits you. Just don't listen to all those experts on the podcasts, on the radio, on the T who tell you to invest one way, and there's only one way to invest. Some will even say there are many ways to invest, and just try to find that investing style that suits you to a T. So with Kneppy's portfolio, I use a momentum and sentiment strategy. So I buy those companies. I'll tell you some of my rules in the next slide, but I just buy those companies where there's a bit of positive sentiment behind the company and the share price. And the second reason I decided to start this portfolio and track it against a benchmark was because I kept hearing people I knew and also experts tell me and their audience that the individual investor cannot beat the market, so they shouldn't try, and they should just put their money into an ETF or many ETFs. Now, I don't really believe that, because I sincerely believe that if you put the time and effort into your investing life, you can and will beat the market, particularly if you find that investing style that suits you. So I really wanted to test that sort of thinking with this portfolio and track it against a benchmark. And you'll see the results of that in the next few slides. Even Warren Buffett has said that you should just put your money in the ETF if you're not willing to put the time and effort. He's also said that if he was a private investor, he could get, double, I think not double the returns, he could get 100% returns per year if he was a private investor. So fund managers, in a way, are constrained in what sort of returns they can get, and individual investors are not constrained. We have advantages over professional fund managers, and if we can use those advantages to our benefit, we can significantly beat the market. What are some of the investing strategies I use for Kneppy's portfolio? So I do have some rules here and some buy signals and sell signals I am looking for every single day. The most reliable buy signal I have found is a breakout in the company's share price on a positive announcement, in particular when you see really high volume. So those sort of announcements that are positive are financial related. So a profit upgrade or just a trading update. And we're seeing quite a few of those over the previous 2 or so weeks. Now, not all companies will release positive announcements to the market. Sometimes all you'll see is a shift in the momentum and sentiment of a company's share price. So a company's share price has been in a long-term downtrend, it's been consolidating for a while, and then all of a sudden you see an increase in volume and the share price starts to increase on no announcements. So that's a positive shift in momentum and sentiment. I'm always looking for those sort of companies as well. I find that buy signal to be less reliable than the other one, the breakout of a company's share price. Now, when it comes to sell signals, it's complete opposite than buy signals. So any sort of negative announcement from a company is almost an automatic sell. And you'll see that in a couple of my disposals during the week. And the other one is just when the momentum and sentiment of a company just shifts or becomes negative, and you just see share price start to go down or become, turn into a downtrend, and the sentiment of the company becomes quite negative in the media and that sort of thing on Hot Copper and all that sort of jazz. The first thing I always like to look at is the sentiment or the overall sentiment in the markets. So I look at the XJO, which is the ASX 200, and it's probably safe to say we are in a slightly bullish period, and we've been in this slightly bullish period for about 5 months or so because we've been in this upward sloping trading channel during that time period, and that means the overall trajectory of the markets is up at a slow growth rate, but that's pretty good. That's pretty healthy. And right now, we're nearly at the top of that channel. In fact, over the past 2 weeks, the stock market has gone sideways, and we have been, over that 2-week period, down 0.5%, but most of that fall was on the last trading day on Friday, the 30th of April, where we did see the market fall about 0.8%. So you take away that day, the market has gone sideways over the last 2 weeks. But the main thing is we're near the top of the channel, and I thought we might have been going sideways or staying near the top of the channel for a little bit of time. Wouldn't surprise me to see testing the bottom of the channel, so don't be surprised if we have a couple of down weeks over the next month or so. But the main thing is we stay within the channel. If we move above the channel, that would be a very bullish move. I'm not sure what will be the catalyst behind that, but if we fall below the channel, that will be fairly bearish news. So looking at 6,800 as a safe area to buy into if it gets towards that. Now, in the short term, I am quite bullish about the stock markets. I'm not sure how long I'm going to remain bullish for, and over the longer term, I am bearish. I do believe we're in a need for a good correction, but I just don't know when that correction is going to happen. So that's the main reason I would not go to cash right now, because we don't know how long this bull run will continue. It could go for another 2-3 years or so, but I definitely believe it'll be very healthy for us to have a correction simply because the market is very frothy now. A lot of wild speculation in the markets, and I think it's very natural for the market to stop that wild speculation, that frothiness, by having a really good correction, say a 20% correction or so. Onto the disposals and acquisitions for the week. 3 complete disposals: Blackmores, Aeris Resources, and Zuno. All 3 companies released an announcement to the market that was fairly bearish or negative. The other disposal wasn't a complete disposal. It was half of my holdings in TPC Consolidated. That was complete opposite. The share price has just run up so much, I decided to lock in profits just to take in the fact that my holdings in that company were just getting too high at that point in time. 3 acquisitions for the week: Next Science, Fenix, and Sims Metal Management. Fenix and Sims Metal Management did release positive announcements to the market, and that's the main reason I decided to take a holding. Next Science was more of a shift in sentiment and momentum in the share price. No positive announcement. It was just lucky that a few days after I took a position in the company, they actually did release a positive announcement to the market, and the share price did take off and has increased since then. So a little bit of change and shifts in the makeup of the portfolio, and I'll get into the reasons or some of the reasons why I made the acquisitions and disposals for the week or fortnight. Before I get to why I made the acquisitions and disposals, just a bit of an update to the performance of the portfolio. Up 1.6% for the fortnight. Very happy with those returns. And you'll see, if you're very astute, that there's not many red companies there. So not a lot of companies that are down in share price, only 3 at this point in time. Treasury Wines, which I've been talking about selling for a while now, but the share price has been going down very slowly. Also, Clean Space down only 5%. And one of my new purchases, Sims Metal, is only down 0.7. Just bad timing, because the last trading day the share price did fall there. So I'm not that concerned at all with that share price fall. So the main thing about this portfolio is ride your winners as far as possible and cut out your losers. So only those companies where the share price is not performing, get rid of those. There's no point just hanging on and hoping the share price would turn around. Sell out of those companies and buy into a company whose share price does look like it's going to go up. So that's the whole reason why the strategy, or this strategy, works. So the best performing companies for the week were TPC, up 15.8% or $1,400.20. Next Science up 21%, and that's because they released a positive announcement to the market. And my best performing company since I started this strategy is Dusk Group, up another 12.3%. And right now we're almost at 85% capital gains. They've also given a fairly good dividend as well. Worst performing companies, Hammer Metals down 22%. Northern Star down 6.2% and Pact Group down 5%. But Northern Star and Pact Group still in profits there. And Northern Star is starting to look interesting. I won't talk about that company in this video, but the share price was in a nice, or looked like it was developing into a nice uptrend, but it might have failed that uptrend recently. Pact Group is still definitely in an uptrend. Onto the performance of Kneppy's portfolio, which I've called MSP in share sight to the benchmark. I'll be looking at 2 periods here, a 3-month period, and then the performance since inception, so since August 2020. Now, in the past 3 months, Kneppy's portfolio has a return of 25.7%, and the benchmark has a return of 7.6%. So more than triple the benchmark return. So I'm very happy with how this strategy is performing at this point in time. So that includes capital gains and dividends. And the 3 best performing larger companies, so I'm leaving out TPC and Stonehorse Energy because these are companies most people would have heard of, have Dusk, Pact Group, and SG Fleet. Dusk up 75%, Pact Group up 24%, and SG Fleet up 31%. And the main reasons I bought into those 3 companies have come to fruition. Particularly Dusk and Pact Group were bought on because of very positive news. SG Fleet was bought because of a shift in sentiment and momentum in the share price. So both sort of buy signals do work, but you can see with Dusk up 75%, that was bought on December 29 because of a positive trading update. And a lot of people wouldn't have bought in because the share price on that day rose something like 10 to 15%. And when people see that share price rise like that, they don't buy in, they refuse to buy in because, well, the share price is higher than it was a week ago. Why would you buy in when the share price is higher? You can just see here, Dusk up 75% since that trading update in December 29 last year. Now to the performance of Kneppy's portfolio to a benchmark. Now, my ultimate goal was just to beat the market, but if I was being honest with myself, I really wanted to get double the market returns. And the reason I wanted to get double the market returns was because 2 of my favorite investors of all time, Peter Lynch and Warren Buffett, their funds get double the market returns. So if I can get double the market returns, that's showing you that I can perform just as well as some of the best fund managers in the world, or best managers in the world at least anyway. So Kneppy's portfolio, yeah, up 37.4%, and the benchmark is only up 17.12%, so more than double the returns. And the best performing company during, or since I bought into the company, was Dusk, up 95%, when the overall market during that period is only up 7%. Now that's ignoring 2 of my best performing companies, which is TPC and Stonehorse Energy. Both of those companies, my returns are well above 100%, and I've taken profits in both of those companies. Now I just want to talk about individual companies, and the first company I want to discuss is TPC Consolidated. This was the best performing company of the week and one of my disposals. So I didn't completely sell out of TPC. I'd sold half of my holdings about just over a week ago, and that was about $3.84. It was on the strongest day, so I sold on strength here. And I was just getting a little bit nervous with how the share price had just run up so quickly in the previous 4 or 5 days. It went up from $2.50 to $3.80 when I sold in about 4 trading days. Share price kept on rising after I sold, so a lot of momentum, and that momentum continued for another day. The share price got to $4.50 and has fallen since then. But it looks like the share price has already started to turn around again for another potential upswing. So very excited about this company. I won't be selling up my other half unless I get some negative news from the company. So this will be potentially a very long-term holding for me. Hopefully, if I hold this company for 5 years, that means the share price will be significantly higher than it is now. Now on to a couple of my disposals, and the first one is Zuno. So Zuno I bought in about a month ago because they released a positive announcement to the market and share price rose up 50%. And I'm never resistant against buying into a company when the share price has risen so much on very high volume. You see the volume there is quite dramatic. Share price went sideways then for a few weeks, and then we did see the share price rise from 80 cents to above $1 in about 5 trading days. In fact, we did see the share price rise 18% 2 days before they released their Appendix 4C. And I thought that could have been a sign that the quarterly report might be quite optimistic or quite good. But it didn't. They released their Appendix 4C to the market, and there was some negativity in there, particularly around the statement sales were below expectations. That's not a good read whenever you see that in a report, and the market didn't like it. I didn't like it. Immediate sell, because that's a negative announcement in my eyes. And whenever I see a negative announcement, based off my rules, that's an immediate sell. So Zuno out of my portfolio. But just because it's out of my portfolio right now doesn't mean I won't buy in the future. At this point in time, just looking at the chart, if the share price holds around 80 cents and consolidates around 80 cents, that could be a buy in the future. If the share price increases from here, well, that's okay, because I've limited my losses or potential losses by selling out of a negative announcement. And the reason I do that is because I've seen a lot of times in the past, I'd say majority of times in the past, when a company releases a negative announcement, the share price can continue to drop for a while until it goes into consolidation and begins a new uptrend a few months later. So I just want to limit my potential losses by selling out of a company when there's negative news. And you can see that with Blackmores. Now, one of the reasons I bought into Blackmores, it wasn't a high conviction buy. We were seeing higher high and higher low, so I thought maybe there was a developing uptrend. And then they released a shareholder briefing to the market about last week, and there were quite a few negative statements in there from the company. So they talked about inbound spending significantly down. So that's talking about travelers overseas coming here and spending, and they weren't seeing that. Weaker category consumption into 22, and that's going to be reliant on international travelers coming into the country as well. And also they talked about how the mild cold and flu season meant there was going to be there is surplus stock. So a fair bit of negativity in that shareholder briefing, and the market saw that as well, and we saw the share price be hammered for 3 consecutive days. In fact, the share price went from $84 to about $71. So as soon as I read the negativity in the shareholder briefing, that was an immediate sell. We can see what happens with the share price when the market digests that news. It can really punish the share price. It looks like the share price has been consolidating around 71 to 72 cents, which is a good level of support. So again, this actually could be a good price to buy in if that level or that share price holds in the next few trading days. And the final disposal for the week was Aeris Resources. Now, I bought this company for 5.6 cents about 7 months ago, and I was very optimistic about the long-term future of this company because they did the acquisition of a gold mine, and that was performing very well. Unfortunately, it seems like their copper mine is not performing. I won't go into detail in regards to why I found that disappointing, but the costs of mining copper have increased, and it's really interesting for me because a lot of copper companies now, or copper mine companies now, are performing very well. A lot of tailwinds behind those miners, for instance, Copper Mountain, those sort of mines. So it seems like there could have been tailwinds behind Aeris, but they're just not taking advantage yet of the higher copper prices. In fact, the costs to mine copper have increased quite a bit over the past quarter. Hopefully that can come down in the next quarter. They did talk about that, but the market did not receive this quarterly report very well. I did not receive it well, and because it was a negative announcement, in my opinion, that's why I sold out of Aeris Resources. Enough of the bad news, and let's focus on the acquisitions for the week. And the first company I'll talk about today in regards to acquisitions was Next Science. So this is a 6-month chart going back to November last year. You can see for the first 5 months, the share price was just going sideways. It was consolidating. At this point in time, no reason to buy in until you saw a bit of a breakout. Now, there was a bit of resistance, which I've named support here, but became support. There was a bit of resistance at $1.40. Hit it twice, and both times it hit $1.40, it pulled back. In fact, it hit it 3 times almost. And every time it hit that level, the share price pulled back. And then when it pushed through on good volume, that was a breakout in the share price. I did a video on Next Science a few days later, and I said if the share price pulled back and tested the support level at $1.40, I would take a position. I just don't think the share price would pull back to $1.40 the day after I did that video. And to be true to my words, I decided to take a position in Next Science at $1.40. And it was just luck that a few days later, they released a positive announcement to the market in regards to one of their products being cleared by the FDA for sale in the United States. The market sort of liked that announcement. Well, initially, it really loved that announcement because the share price opened at $2, which is a significant rise in the share price. And a bit of selling came in during that day, which I don't like to see. But the share price has consolidated around $1.70 since then, which is good news. So I think the share price could continue going up from here on in. Sims Metal is the next acquisition I want to talk about. The share price has been in a really nice uptrend for quite a while because there are a lot of tailwinds behind this sort of company in this sector. So Sims Metal is into recycling and electronics recovery. Now, in regards to recycling, I was listening to a podcast, I think it was Planet Money. They were talking to this scrap metal guy in the United States, and this guy finds scrap metals and he takes it to a recycling center, and a recycling center gives him money. He has never seen it this bullish in that sector right now. He said the amount of money he's getting for scrap metal is quite insane, and Sims Metal is the type of company you want to be in that sort of bullishness, that's those sort of tailwinds. And you can see that with the share price being in this uptrend for quite a while, and also the positive announcement that it released to the market. The trading update was quite positive. The market received it very well. Share price shot up about 10% on the day. And when the share price retreated back to $16, I decided to take a position then, because I do think these tailwinds right now behind Sims Metal can last quite a while. But as soon as those tailwinds start to ease back, that would be the time to sell. Final acquisition for the week was Fenix. This company has been on my watch list for about 5 months because I didn't know they were going to go into production in the first quarter of the calendar year 2021. So I was just waiting for the release of their quarterly results. And as soon as I saw the quarterly results, I was pleasantly surprised, and I just had to take a position because the operational cash flow of the company was very impressive. So I took a position at 31.5 cents the day after they released their announcement. Sometimes I don't take a position on the day a company releases a positive announcement. I just might wait a few days, and Fenix was waiting 1 day, and the share price has increased from there. So I do like the volume increase, the share price increase, and the fact that the management were quite bullish about the next few quarters as well. The last company I want to talk about is the best performing company in my portfolio, and that is Dusk. Now, this is also the perfect example of a breakout buy signal, and the breakout buy signal is the most reliable signal you can get. Now, the breakout buy signal happened on the 29th of December when the company released a trading update to the market, and the trading update was very positive. The share price increased 20% on that day. So don't be nervous or hesitant about potentially buying into a company when the share price increases by that amount in 1 day on positive news, because you can see the share price since then has just kept on going up. We did see a period of time around March into the middle of April where the share price went sideways. In fact, the share price was going or trading in this channel, and what we needed to see at that point in time was a breakout to the upside on positive news, and Dusk gave us that with another trading update, a positive trading update, and that was the next breakout. It pushed the share price to the top of that trading channel and has gone higher ever since. The last 2 weeks looks like the share price has been consolidating, going sideways, and that's very healthy. So at this point in time, Dusk's chart looks amazing. One of the best charts you can see. There's actually quite a few good charts on the ASX right now. I think Centire CTT is an amazing looking chart as well. So, and that is all I've got for this update 21 to Kneppy's portfolio. If you have any questions about this portfolio, how I've set it up, what decisions I use to sell and buy, so the buy signals, sell signals, I do recommend you leave a question in the comment section and I'll answer any questions you give me to the best of my ability. If you have any criticisms in regards to acquisitions I've made, disposals I've made, I do suggest you leave a constructive criticism, not a destructive criticism, because constructive criticisms I will take on board and embrace. Destructive criticisms I will just ignore because they help nobody except maybe yourself if you're a psychopath. So I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.